thank you for joining us. This is Business Incorporated coming to you live from our Lagos studios here in Nigeria. I'm Chimezie Obi Iwago. On the show today, Tanzania targets setting up mineral exchange by end of 2018. South Africa opens door to future Russian nuclear power deal. Plus, Zimbabwe's cashless economy leaves businesses stranded. Let's get the show started now with the markets. And here in Africa, the two major markets were in the green at intraday, and that's the market here in Nigeria, which was up 0.05%. The Jersey index in South Africa was up 0.68%. However, Egypt was down 0.27%. Kenya was also up on Wednesday. And in the Middle East, it was again a mixed bag for markets at intraday. Abu Dhabi and Dubai were up 0.29% and 0.14% each. Qatar and Saudi were down 0.06% and 0.060%. And in Europe, markets traded higher in early trade as concerns over rising trade tensions between the U.S. and Europe showed signs of easing. Well, let's get more from my colleague in Frankfurt, Daniel. Hello, Daniel. Good afternoon.
Hi, Jimmy. Good afternoon from Frankfurt, where we are really suffering with very high temperatures right now. 36 degrees outside. Maybe you guys are used to that in Nigeria, but for us, let me tell you, this is hot.
I'm sorry about that. Well, we are used to that, but it's actually raining season down here in Nigeria. Anyway, let's talk about some of the good news coming out from Trump and Juncker's meeting. We've seen the IMF chief, Christine Lagarde, say she's happy that trade war between the U.S. and EU has been averted with that meeting on Wednesday. What's in the news and the markets today in Germany and in Europe?
Yes, exactly. I mean, this was really kind of a surprise, I have to tell you. When I was watching this also yesterday unfolding on television, when this press conference that was not planned, was announced between U.S. President Donald Trump and European Commissioner Jean-Claude Juncker, I was really wondering, what are they gonna say now? Well, they said that at least for the moment, those tariffs from automobiles are off the discussion. This was just a few minutes also confirmed again by the Trade Secretary of the United States, that those negotiations are still going to continue, that Europe is going to buy gas and also soybeans from the United States as an exchange. Yes, and I guess you can see it in the background. This latest news has been very much appreciated by traders. We are really in the green here at the moment, more than 1.3% plus at the moment, though investors are telling me they don't really know if this is really now going to be the end of the trade conflict, because we know we are dealing with a U.S. president there overseas who can rapidly change his mind from one day to the other. Very interesting also that car shares are very much demanded right now. We saw a big plus today of Volkswagen. Volkswagen does big business with the United States, and even though Daimler, who reported rather lousy numbers today and usually would have been here definitely in the red, was mostly during the trading day so far in the green, also as a result of this news coming from the United States. So yes, let me tell you, investors here are rather satisfied and a little bit relieved here at the moment.
So how much of the tariffs rhetoric and the Juncker effect on President Trump will reflect in today's post-rates meeting briefing by ECB Mario Draghi?
Well, we had the ECB meeting today and also the press conference. I guess it's still going on at the moment, but we already learned some details. I mean, there's of course always this question when the monetary policy here of the European Central Bank is going to change. We still have this policy here of extremely cheap money, of the 0% interest rates that have been here in effect since 2016. When we were listening closely to the words that Mario Draghi was sharing with the press, it seems that, yeah, maybe in 2019 this could be changed. Already by the end of the year, the bond purchasing program will come to an end. We have to remember that the ECB was pumping there every month 60 billion euros, then it was reduced to 30 billion euros a month, and now we are hearing that from fall this year it's only going to be an amount of 15 billion euros a month, so again reduced by 50%. It was not really a surprise that the interest rates today were not changed. Nobody was really expecting that, and if this would have been the case, we would have most likely seen also a negative reaction here at the market, because the financial market is just not prepared for that scenario at the moment.
Well, I'm sure we will soon get all the details from Draghi. Anyway, let's look at some corporates there. Google, Facebook, and Twitter have been asked to appear before the U.S. Senate again to discuss Russian meddling, just as Facebook revenue warning hits the streets today, dragging the stock and NASDAQ 100 futures. Is this techies jitters spreading into Frankfurt today?
Yes, I can tell you that everybody was taking a very close look also when yesterday in the after trading in the United States, the Facebook share was really going down, in the last time with more than 20%. I mean, for a long time it seemed that, Facebook was completely without any big competition, but this is not anymore the case. It seems to be like that, at least. Also, the user numbers of Facebook have been dropping lately, also here in Europe, and other pages such as Instagram and also Snapchat, they're getting more and more popular. And also this data scandal, of this company here in Great Britain that was buying all these data from Facebook, and then we don't really know what they did with it. This is still really overshadowing, and as a result, yes, it was kind of like a slap into the face of Facebook. They are not doing anymore as great as they are used to, but I mean, it's still one of the most valuable companies in the world. But we can really see that the big shine that has been dropping a little bit lately.
All right, thank you very much for your time, Daniel. We just have one more day to wrap up the trading week. Hope to see you tomorrow. Enjoy the rest of the day.